The U.S. economy will shrink by 6.5% this year, unemployment dropping to just above 9%. Central bank signaling it expects to keep a major level of support for the economy in place for the year, including rock bottom, basically zero interest rates through 2022. With rates so low, your next guest says the housing market could be the driver to lead the country out of recession. Jeff Taylor is co-founder and managing partner at Digital Risk. That is the nation's largest provider of mortgage risk compliance and transaction management technology. Jeff, good morning. The housing market in many areas has been red hot, particularly in the Northeast. Any sign of a slowdown?
Good morning, Ryan. Thank you for having me. What a different housing market that we have right now than we did 10 years ago. If we look at the overall numbers, we have $33 trillion is the size of the U.S. housing market. That's up over $10 trillion from 2012. We had home equity at $18 trillion right now. That's up from $6 trillion in 2010. The housing market heading into this pandemic was, like you said, at all-time highs from equities, strength of the consumer. So it's been fantastic. And working with our servicers and our lenders, it was an unbelievably strong market. Yet now, post-COVID, we're dealing with this other pandemic, other issue, which we're also looking at the fact that we have all these mortgages now that have gone into forbearance, about 4 million of them. Good news here, Brian, that not many people know, about 32% of those borrowers that jumped into forbearance are actually still paying their mortgage. And that's critical compared to what we saw in the financial crisis. That means that over the last decade, they have really built up that home, that equity in their house, and they value it. And they're not just at the first sign of an opportunity not paying their mortgages. They're continuing trying to stay into it, paying the mortgages. So when they come out of it, they may need to tap that equity to make it to bridge this pandemic or the next year in their life, and they really value their houses. So overall, I think the housing market's never been stronger, never been structurally different. Yeah. And also by use of technology, we have much better ways to help consumers and lenders reach out to different borrowers.
You know, and that's important, Jeff, because obviously financials took it on the chin yesterday, and sort of you could make the argument that maybe the most important macro stock in America right now might be Wells Fargo. Wells Fargo down 44% year to date. It is down big again this morning. They are, I believe, the top two mortgage holder and originator in the United States. So your data goes directly to companies like that. Are you seeing signs? You just gave us a little good news. Are you seeing any signs that the mortgage payment situation may get worse or better in the coming months and quarters?
Yeah, like I said, right now, I think it's going to get better. I mean, look, if you have 30 of the 4 million people that took out these forbearances, 32% are still paying. So what does that tell us? It tells us that they took it out as more of an insurance policy right now. They want to see, they might have some issues, they may be looking at some coming forward, but they took it out as an insurance policy right now. They want to see, they might have some issues, they may be looking at some coming forward, but they took it out as an insurance policy and they're still paying. So I actually think that we've leveled off at forbearance. Director Calabria said it's about 6.7% for the mortgages that Fannie and Freddie own right now. I think we've hit that peak. I think that we start to come down. And the good news about that is the big banks, you just called out Wells Fargo, they've got great systems and people and process in place to go ahead and help the borrowers to make sure that if they do need assistance, whether it be modification, different repayment plans, that structure is in place to do so. So again, I look for a very, very strong housing market coming forward. And actually home price depreciation, I think it's flat this year. And believe it or not, I think maybe we're up 1% next year. So I think it's very strong.
It is very important data. It's the biggest purchase that we all make. Jeff Taylor, co-founder of Digital Risk. Jeff, pleasure to get you on in housing. Thank you very much. Take care.